Hi, welcome to this online session from Impact Taxation and Financial Services. In this session, we're going to have a look at our long-term tax planning services on rental properties. Okay, here is a brief introduction about myself. You can pause the video to have a detailed look. Before we go to the main content, I just want to mention that the information provided here is for general information only. Before you make any decisions, please contact a professional person in their specialized fields. Okay, so here is an example of our long-term planning reports, or a section of it. Okay, so when we prepare the charts, we actually help this particular clients to prepare 4 different scenarios. Scenario 1 will be individual ownership, okay, to hold the property 90-10 split between husband and wife. Scenario 2 will be 50-50 split between husband and wife. Scenario 3 will be 100% in the family trust. And scenario 4 will be in SMSF, self-managed super fund. Okay, so when we compare the 4 different scenarios, we actually looked at the whole 20 years when the couple will be holding the property. Okay, so then when we compare different scenarios, scenario 2 will give them the best tax saving of $80,000. Scenario 3 will give them, or actually they have to pay tax about $70,000. Okay, so you can actually see right away, if in case they have chosen a wrong structure at the very beginning, they will be losing 70,000, and then versus the best case scenario will be saving 80,000. So the difference will be 150K, right? So the mistake can be really costly if they don't do this analysis. They don't know that they're paying too much tax. And then, of course, sometimes the income tax and capital gains tax will have conflicting results, okay, as we can see. So the chart below is actually a breakdown of taxes. Yeah, as you can see, scenario 1, scenario 2, because this rental property is actually giving them tax loss. Okay, that's the reason why that's actually opposite to each other. All right. So without this comparison, we actually don't know the combination of the net effect, yeah, combination of income tax and capital gains tax. All right. So this is the main reports or main charts we're actually providing in our report analysis report. All right. So what's the benefit of or the benefits of long-term planning for rental properties? Okay, it's because we need to consider different ownership structures. Okay, as what we can see from the charts earlier, different structures will give you very different outcome on tax. All right, so you got to compare different structures before you make a decision. Yeah, sometimes if you don't know, you just attach everything to individual ownership, but that might not be the best scenario for you. All right, and then that's because different structures actually have different tax rates, different tax treatment. So you got to do the comparison, and also you got to consider long-term factors. Yeah, if you say for an example, when because rental loss will help a high income earner to reduce more tax, you might want to allocate more ownership to that person. But what if okay, the person's income changes in future years? You got to factor that in, yeah, in the planning strategies. Okay, because sometimes people might plan to stop working for a few years to look after a baby, okay, to maybe go travel around the world for like 1 or 2 years if you can afford it. All right, so you got to factor that in as well. And then of course combination of income tax and capital gains tax strategies, okay, because they can be in conflict with each other. So because income tax is actually from year to year on your rental income, okay, capital gains tax is at the end of the ownership, okay, when you are selling the property. So say for an example, if the property is giving you a tax loss, yeah, you might want to give more to the high income earner, as what we mentioned before, but then the capital gains tax could be more as well at the end. So one side is saving, one side is paying more. So you have to have a look at a combination of the picture, including both scenarios. Okay, and then of course you also need to include cost benefits analysis. The cost benefit is quite typical. Sometimes, say if you go to an accountant, you might mention, okay, what if I want to change the ownership from my individual ownership to a family trust on the investment property? The accountant might tell you, okay, if you want to change now, you have to pay capital gains tax, you have to pay stamp duty. And then just because of that, you will say, oh, I don't want to pay the cost. Then you stop you actually decide, okay, I don't want to change. But what if you can actually recoup the loss in 3 years and then gain more in the long run? Would you do it? But how would you know without doing the analysis? So that's actually what we do, because you got to include long-term analysis here to see whether your decision is going to be correct for the long term. Okay, correct decision for long term. That's important. All right. And then also because I'm a CEPAPA member, so we do provide services related to asset protection, succession, and estate planning as well. So if you have any questions on different structures, okay, we actually can give you advice on what structures or what other strategies you can add to your ownership structures that will help to protect your family wealth. Okay, so that's something we can do as well. That's included in the long-term planning for your investment properties. All right, and then we actually had a longer YouTube session called "Why Property Owners Are Paying Too Much Tax." So we actually introduced more details there. If you're interested, you can actually watch that longer online session. All right, so here are our contact details. If you have any questions, let us know. And thank you for joining us for this session.